Good morning, everybody. It's a pleasure to be here today. My name is Rob Curtis, CEO and co-founder of Daylight, the first and only digital banking platform designed for the LGBT community. I'm very excited to be here today. I have the pleasure of coming as a former policy advisor in the Australian government, where I developed our country's migrant employment strategy and our homeless employment strategy, both of which, in which roles I saw the role of poverty and financial inclusion up close. I have the pleasure of attending as a CEO of a startup that's dedicated to financial inclusion, Daylight, and whose mission is to ensure that queer people have access to the tools and products they need to live their best life. And lastly, but definitely not least, I'm a proud member of the Financial Health Network and a FinLab founder. And indeed, when I picked up my lanyard yesterday, I felt, with all of these colourful ribbons, more like Miss Hollywood than I did a founder. It was lovely. This is always a fun slot, the best slot of all. First thing on the last day. And as I've looked around, I've seen plenty of hungover faces, which means that my job is to give you all a shot in the arm for the last part of what has been an incredible 3 days. Hopefully to energize you all, to give you some things to contemplate and to inspire some real action before you leave. We're here because we want the same thing, to work together to ensure that every American has access to the tools and products that they need to live their best life. And I'm here to talk about designing for financial health, and I want to use this conversation to do two things. Number one, to share with you some insights for some financial inclusion work that we're doing for a group of people you may not have thought about. I'm going to talk about a case study that we're working on right now for a group that's often overlooked. And secondly, I want to share why I believe we are facing a crucible moment that warrants a look at how we can ensure that we build a sustainable financial inclusion ecosystem that's resilient for years to come. So first, a little bit about Daylight. We founded Daylight in 2020 to be the first digital bank really focused on the needs of the queer community. And we launched with our first service, a trans-inclusive checking account, in 2020. What does it mean to even have a trans-inclusive checking account? We started with the lived experience of my COO, Billy Simmons, a trans woman who spearheaded this initiative. And it was based on her lived experience trying to update her gender markers at a large incumbent bank on her main bank account. She needed to do this because 40% of people that use a debit card or a credit card that does not match their gender presentation face violence, accusations of fraud, and refusal of service. This is not a luxury, this is an essential part of her transition and her safety every day. But this process was costly and expensive for people that are often the most vulnerable. She needed to go to a doctor, a lawyer, a judge, the courthouse, eventually a notary, and then she could go to a teller. And yes, she got her card updated in her name, but every time she was sent a text message about her credit score, dead named. Her login ID, dead named. And Daylight started by looking at this problem and saying, this can't be how it has to be for our community. So we built a technology layer that allows trans folk to have an account and card in their chosen name, irrespective of what their legal ID says. This means they're safer at home, they're safer in stores, they get to feel dignified and respected by perhaps their first institution that took them seriously. And importantly, we took away friction and cost that it takes to use products as the person that you really are. Now, similar initiatives had been launched by companies like MasterCard, but provided point solutions. One of your cards out of many cards from your financial partner may be in your real name, but you would continue to be dead named across the rest of their product suite. And we believed that offering a complete solution met our customers where they were, and we knew that it was really important, not just functionally, but emotionally, because we have a team staffed of queers, and this stuff is personal. Now, this may feel like a small edge case to start with and to build a business around, but let me share some facts. There are an estimated 30 million queer Americans. If we were a state, we'd be the second largest behind California, and we spend $1 billion every year, more than the GDP of Mexico. Every generation, more and more people are comfortable being open about who they are and who they love. 4% of baby boomers, 35% of Gen Z self-report as queer. This is a growing audience who, as I'm sure you've noticed, will not be ignored. The trans community too is growing. We estimate more than 1% of the population is trans or non-binary, and this number appears to be accelerating as society is changing and access to healthcare is more prevalent. This is no small group, just an overlooked one. There's a pattern here about designing products that are financially inclusive that we have followed to release our first checking account. And indeed, we're following again for our next major customer segment, the 3.6 million American LGBT people that are looking to start or expand their family within the next 5 years. And this is the story of financial inclusion that I want to share with you today. Imagine two people, Eddie and Joel, an American-Brazilian couple looking to start a family. Sounds easy, right? How many in this room have a family? To have a child that is biologically their own, the total cost for Eddie and Joel, outside of traditional family building costs, doctor's visits, hospital out-of-pockets, clothing, painting the spare room, this total cost for Eddie and Joel will be somewhere in the middle six figures. The cost of a surrogacy can exceed $300,000. So to get Eddie and Joel on their way through a major life event, creating their own family, we're going to need to give them access to a significant amount of capital. Now, this could be mortgaging their home, remortgaging their home. It could be relying on one of them being a banker with a big bonus. That would be nice. And it may be that one or both of them have access to intergenerational wealth because they're not one of the 45% of queer people that are cut off financially from accessing family wealth when they come out. But more likely, Eddie and Joel won't be able to get there. They'll need to make compromises. Perhaps they'll move to a new city. Perhaps they'll decide they need to choose between a home to live in and a family to fill it with. Maybe they'll look to adopt and give up on their dreams of having a biological child of their own. They'll certainly feel alone through this process. No matter what they're experiencing, Eddie and Joel are unlikely to get the help that they need from a financial services partner. That is, until next year, when we launch Daylight Grow, a checking account that is designed for queer prospective parents, with financial tools, loan products, and so on that are designed to support queer family creation. But this isn't a product launch announcement. That's one for another day. What I want to do is share a little bit of insight into how we launch a product like that. The very same template we use for our trans-inclusive checking accounts. So to design Daylight Grow, we have a team of 23 queer folk and a couple of allies who are obsessed about queer family creation. And just like when we designed for trans-inclusive banking, it's the one thing that our team think about, day in, day out. One life event for one part of the segmentation for our community, the LGBT community. Our team, alongside 10 prospective queer families, are co-designing this next generation of family building products. We're doing this to get instant feedback with a cadence that's really fast. We meet our prospective parents on Mondays, we hear about their pain points, and by Friday, we're sharing mock-ups of UI designs for the features that they need. This real-time feedback loop not only allows us to show our early advocates that we're listening, it allows us to de-risk the products that we are building, and allows us to look with some first-hand knowledge beyond just the functional needs of our community. We get to hear what they're going through in real time. And the quality of feedback is phenomenal. Indeed, our prospective parents aren't just looking for loans and payment products, which of course they're going to need. They need help end to end to achieve this life event that is far too complex to go it alone. So I'm going to share with you some of the things that we need to design for to make that service deliver on that promise. We've learned that financial advice needs to be hyper-tailored. We've learned about hidden costs, stories of loss and grief, sometimes paired with a need for more investment, the terror of knowing that your legal rights are changing daily, and the fear that you'll end up being one of the queer refugees, and that is not a mistake, forced to leave states like Florida for fear that they'll have their children taken away by child protective services, because this is America. To design financial services for Eddie and Joel, we need to understand and design for their emotional state alongside their functional needs. And we believe our advice needs, in order to be culturally competent, to have a real understanding of what they're going on. So our life events model, we're still using those, right? Needs to recognize the non-linear nature of parenting for my community. Our tools and planning support needs to account for those hidden costs, like second parent adoption, like waiting for weeks in a different state for an OBGYN who's not that keen on queer parents to sign a birth certificate. And this could be 4 to 6 weeks. This is a real lived experience from parents that we talk to. We need to understand that maybe one of them is trans and for a period of time needs to go off of hormone replacement therapy so that they can be fertile again. And our advisors, customer ops, and product analysts need to be aware that the conversations that they may have with a customer could equally be around access to a loan, but also the loss of a legal right or the loss of a child. And that's why co-designing has been so successful for Daylight as we innovate. Hands up who's a little overwhelmed by what you just heard. I certainly am. And I'm a parent with 2 children, 2 wonderful queer women. And I plan to start my own family very soon with my fiancé Cesar. The fact of the matter is that I know that there is no culturally competent financial service in this country that could support my needs and my fiancé's needs, and so I'm building it. Yes, today I see stock images of 2 gay dads with a child on all of your websites. Sometimes, if I'm lucky, I may even see it outside of June. But sophisticated and personal services, not right now. And I love what I do because it allows me to do the first and most essential thing that is required for designing for inclusive financial inclusion, which is deep, deep expertise and empathy for the lives of our members. This is personal, yes, but I have a team of innovators looking at the problems for my segment day in, day out. And customer empathy is more than just UX interviews. It's feeling as comfortable understanding a customer's pain points and lives as you are in an old pair of shoes. You've walked a mile in those shoes, you understand what it feels like, and I've learned that for my community, money is freedom. This is personal. These are families, these are children. And I'm really proud of how companies like mine can dedicate time to solving these niche problems, because niche doesn't mean small or insignificant. Indeed, within a generation, my community will be a community of families. And we are solving a niche problem that will become the norm for millions of Americans over the next decade. But here's where I need you to pay attention. Everyone in this room. Because companies like Daylight are under threat. And I believe that financial inclusion requires all of us. Teams of 20 people obsessing over small niche problems, and incumbents that can take those solutions to scale. And I say this because it's been a rocky 3 months in the fintech landscape. I'm going to tell you about the month of May. The dreaded Sequoia note, the good times are over, was the beginning of a crucible moment where early stage startups were faced with the reality that venture can't be there to underwrite loss-making accounts forever. Indeed, in talking to our investors, current and future, we learned that growth at all costs has made way for revenue and profitability. The community neobanks, like mine, who rely on interchange revenue, need high volume spend per customer. And that's really challenging for low-income folks. And our banking as a service partners' revenue share models are based on that spend throughput, which means it's great at Series B, but it's really hard early on. And so what has this meant for my company? We had to face some really challenging moments. We could no longer afford to prioritize low-income trans and non-binary customers. Indeed, since these accounts are loss-making, particularly at early stage, we have to ask ourselves hard questions like, can we offer them at all? I cannot understate the impact that the changing funding environment has had on my business. We extended our runway from 12 months to 24 plus months. We closed down riskier product development with longer ROI. And we needed to adjust our strategy to focus on strong year one economics. And frankly, that means targeting wealthier people. Now, those parents that I described before, they may be wealthier, but they're still financially excluded. But that's not really why people come to build a financial inclusion business. Our family building service will be incredibly valuable, but our plans to roll this out were brought forward by 24 months because we needed to demonstrate that we could make money per customer today as an early stage company. And many companies, just like Daylight, are facing this incredibly challenging funding environment. Some of us will survive, We just closed the Series A, so we're in a really, really good spot. But others won't. And the fact of the matter is another Daylight probably won't be funded again, not through venture. This means that this ecosystem loses innovators that I believe are essential for deeply solving niche pain points for communities and preparing us for the communities that are yet to come. And to really drive this home, I want to share the words of one anonymous investor. Anyone that thinks that they can make money from the poor is either a liar, a thief, or an idiot. Now, those are challenging things to hear. I have to believe that that is not uncommon wisdom amongst the people that are making decisions about whether companies like mine deserve the right to exist to solve these problems at the early stage. And so what does financial inclusion look like in a changing macro environment when the need for financial tools and products to support a community that is facing high inflation and not yet high unemployment, but these things are yet to come? What does it mean? If we go back to what the World Bank defines financial inclusion as, it's about individuals have access to affordable financial products that meet their needs, delivered in a responsible and sustainable way. Why does this matter? I believe that companies must invest and continue to invest in underserved groups, and I believe that companies like mine benefit the ecosystem as a whole. But those last words, delivered in a responsible and sustainable way, ring in my ears. What does it mean when sustainable is under threat? What does it mean when the economy changes and the companies providing vital, inclusive services need to make changes to pursue higher income segments? What happens to those left behind who need us most? Can companies like Daylight, who rely on venture capital, be responsible and sustainable? To put it bluntly, is it the responsibility of mine? What is the responsibility of companies like mine who may need to take services away from poorly performing segments when we're here to ensure that everybody has access to the tools they need to live their best life? And that's not because they don't have solid long-term economics, but because they no longer represent the prevailing wisdom of what makes a company fundable at the early stages, which is where I believe a majority of the innovation is happening in segments like mine. And I believe that to ensure the sustainability of what we do, we need to do what we're doing here today. Bring the entire industry together. Companies like mine need support to move beyond relying solely on VC to get funded. Daylight wouldn't be funded today, which means we need to look towards partnerships with incumbents and larger scale companies to fund our work more strongly, whether that's through direct investment, like our friends at Citibank and JP Morgan, who have invested in Daylight, or through other approaches. I believe we have an incredible opportunity to come together to ensure that our ecosystem of financial inclusion continues to be rich and thriving, with more partnership between small startups and scale companies, where we build real, meaningful partnerships that allow us to continue our pockets of innovation, not as consultants creating slides, but through on-the-ground learning and expertise, backed by data, and with lessons shared in every direction. Financial inclusion requires us all. And of course, there are some really great exemplars of this. Of course, JP Morgan Chase and the sponsors of the conference, like Prudential, for supporting the Financial Health Network. As I mentioned, Citi, Credit Unions of North America, who've invested in Daylight. And more recently, our partners at Fidelity, who I've invited along here today, and who recognize that the path for financial inclusion and the design of those products is more effective through partnerships with companies like Daylight. Of course, as a FinLab founder, I want to call out Adam, Maria, Jen, and the incredible team who work tirelessly on these issues day to day, and everybody else in this room. And I want to leave you with this. If the first rule of designing for financial inclusion is empathy, it's my belief that the second rule is collaboration. And as we go into the final day of these incredible 3 days here in LA, I ask that each and every one of you make that extra effort to push through your hungover, approach someone you don't know, swap a credit card, seek out some deep expertise from that group of people that are hyper-passionate about that one particular piece of this massive puzzle that we're building, and hopefully continue to work together to ensure that our ecosystem supports the innovators like Daylight, who are shining a light on the unique pain points that individual communities face. Crucible moments by nature are hard, but what gives me comfort is that one comes out of those crucible moments stronger. Thank you.